The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 18th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So let's go take a look at one of our tools. This is the tool that I call a soul. A soul without high aim is like a ship without a rudder. Now, folks, a ship with a properly trimmed sail can travel in relation to, in any direction in relation to the wind, with the exception of directly into the wind. And while the set of the sail determines the most efficient use of the wind, it's the rudder that enables the ship to travel in a specific heading. Without a rudder, the ship can do little more than just simply blow aimlessly downwind. Now, what is true of a sailboat is true for you and I, folks. There are many things that we can do that can contribute to our success. Maybe you're already doing those things. Maybe it's your charming personality. Maybe it's your dynamic appearance or your fantastic education that you have. However, those things are like setting the sail. And without a rudder, our steering, which is our steering device, we may not get to our destination. What we all need is a purpose. We all need a goal, an outcome to steer us in the direction of our choice, the direction of what I call our unlimited potential out there. Now, it's always good to keep your eyes open for new ideas. New ideas are all around us. I hope today to be able to share with you some new ideas. Maybe a light bulb will go off because new ideas are always around us. They always have been. They always will be. I'll give you a couple examples. This goes back a little ways, but how many of you have heard of the Montgolfier brothers? The Montgolfier brothers, a couple of brothers from France that invented the hot air balloon. Now, one night, Joseph watched as burnt paper scraps rose up above the flames in the fireplace and, moved up the chimney. You've seen it yourself. It's this time of the year where a lot of folks are using their fireplace, and you can watch as sparks fly up there. Well, that was just by observing that, by watching that, is what gave him the idea that when he realized that hot air could make a balloon rise from the earth. Now, there are a lot of great stories associated with the Montgolfier brothers, like who the first living beings were that actually flew in the hot air balloon. King Louis XVI That's how far back it goes, folks. King Louis XVI of France, he wanted to send up convicts for the test flights, but instead it was decided upon to send up a sheep, a duck, and a rooster. I'm not going to go into the whole story or any of the story as to why those three were chosen, but those were the first three to actually fly in a hot air balloon out there. I'll bet that's something that you didn't know. How about Alistair Pilkington? He noticed a film of fat floating in his wife's dishwasher. That idea, folks, inspired the process of taking molten glass and floating it on a layer of melted metal to provide what we otherwise now is just simply a very smooth surface out there. Pays to be observant, folks, while reaching for your vision. Always open your eyes. Always remember, a soul without high aim is like a ship without a rudder. Make sure you have a goal. Make sure you've got a purpose and an outcome, and then set your sails and keep your eyes open along the journey of life out there. Let's go see what the sails and what the wind is doing here in the futures market. We're going to start off by taking a look at the ES Mini, the 30-minute futures contract out there. Right now, that's trading up about 2 points. The cash S&P should open up about 5 points if it were to open here right now. The Dow futures are up 25 points. Cash Dow should open up about 50 points. The NASDAQ futures up about 12 right now. Russell 2000 up 1.5. King dollar back 9 cents. Gold up 50 cents. Gold not moving. Trading out at 16.98. The silver is up about 19 cents. Not really much movement there. That would be 0.6%. I guess if you look at it as a percentage, that is trading out at 32.48. Natural gas here, the big mover so far this morning, up 6 pennies. That's up 1.8% out there. Across the pond over in Europe, the DAX is up 33 bucks. That's up 0.4%. The FTSE up 21. In Asia last night, you had the Nikkei up 94 points, the Shanghai up 2, and the Hang Seng down 18 points. Our call number 877-927-6648. And as we take a look at the ES Mini, we're looking at the 30-minute chart here. Yesterday when we came on the air, we were watching the A to B equals CD up that was forming. When we took a look at it, it said 1421, 1424 was the likely target. In fact, 1421 was hit right around the 12 o'clock time frame. There were some there were some bears that actually showed up for work at about 1 p.m. yesterday. That lasted until about 2:30 in the afternoon. If we take a look at retracement, what type of retracement? Wasn't a substantial retracement. We're going from a swing point low at 5:30 in the morning all the way up to the level of 12:30. You can see it was a 0.382 retracement. What does that set up? That sets up more than a 1-to-1 A to B equals CD. There are a lot of A to B equals CD patterns here on this 30-minute chart. If we take a look at the one that we started with yesterday morning, this is coming off of the lows of Friday. That's at about 2:30 in the afternoon. That low out there was 1405.75. That would be your A point. Your B point is a swing point high that came in at 7 o'clock in the evening Sunday out at 1417.25. Market pulls back really right into the gap that it created. It had gapped up between the close of Friday and the open on Sunday, came back, closed that, and when it started moving, it really made a 1-to-2 A to B equals CD. That price projection, 1432. 50 to 75, you actually got up to 1434. The market did 1434.25 here at 8:30 this morning. Of course, the 1-to-2 actually completed where it was supposed to. 1433.25, 1432.75 was the actual A to B equals CD formation. That completed at 9 p.m. last night. We do have some bears that showed up for work here at about 8:30 this morning, coming off of the high. A little bit of volume there, of course. The market and the 30-minute chart was in the overbought condition. Just simply traveled sideways between the 9 o'clock time frame last evening and really 8 o'clock or 8:30 this morning when it decided to move off of that level, not in oversold condition. So the bears have shown up for work. If we take a look at other A to B equals CD patterns, let's go ahead and erase this one. We can take a look at the A to B equals CD that was completed here, starting with the 5:30 a.m. low of yesterday, out at 1409, up into the price where the first A to B equals CD was completed. That was one at 12:30. And again, if we pull back here to the retracement, and we know what kind of retracement did it do, folks? That's right. It did a 0.382 retracement. That's like taking this little rubber band here, wrapping it around your energy, only backing off 38.2%, letting it go. And what kind of energy do you have then? You've got really good energy. That means it's going to do more than a 1-to-1 A to B equals CD. What does it do? 1 to 1.272 A to B equals CD. That price projection, 1434. And as we know, you got up to 1434. Not you, of course, but the ES Mini got up to 1434.25 at 8:30 this morning. That pattern also completing out there. What does that set up? It sets up a possible pullback here. You can see right now you've got price from the RSI, the relative strength indicator, down below the midpoint, down below the 50 level out there. And so unless it breaks through there, we'll see a little bit of a movement, a little bit of a retracement to the downside. Where would the ES Mini, where could it pull back to? If, in fact, it pulls back, well, I'd go right into that volume bar from 4 p.m. yesterday. As the market was closing, you saw quite a bit of volume come in on the futures contract. On the 30-minute contract, you're looking at 180,000 contracts. That was on the way up in this pullback here off of 8:30. Only about 56,000 contracts, 38,000 contracts during the 9 o'clock as we came into the 9 o'clock session. What does that set up? Sets up a couple of lines that you could draw on your chart, areas that should act as support. And, of course, support, so long as the volume pulling back to those areas is on lighter volume. So you take a look at the high of that candle at 4 o'clock. I'm going to draw a couple red lines across the screen out here because the support is drawn. The lines are drawn in the sand out here. 1426.25. That was the high of the 4 p.m. close out there, or the low of the of that 4 p.m. That 30-minute chart started at 3:31 in the afternoon, 1419.75. That is where the line is drawn in the sand here. That's on the ES Mini. That is on the 30-minute chart. You can see A to B equals CD patterns all over the place. If you would like to learn how to trade the A to B equals CD, if you would like to become a master of that C to D leg, just go to my name on the homepage at tfnn.com. It'll take you to my I guess that should simply take you to my page. And down below, you'll see the workshop on how to buy and sell the D point. It's it's one of those workshops, folks. If you're trying to say, okay, what is it? You know that you want to learn how to trade. You want to learn the patterns in this market. That is that is definitely one of the workshops that you want to be able to take out there. Maybe that's a good use for Tiger Dollars, because I know you want to make good investments in yourself, and there is no better investment than our Tiger Dollar promotion, which runs through tomorrow midnight, folks. This is where you'll get 25% return on your money. If you invest $100, it's worth $125. You invest $500, it's $600. It might be a minimum of 500 Tiger Dollars, so I apologize about that. 500 turns into, it's 25%, 575. 1,000 is 1,250. So please go over to the homepage at tfnn.com if you haven't done that yet, and go invest in Tiger Dollars. The other benefit there is you get up to 10% contribution that will be made by TFNN on your behalf to the Salvation Army. You get that tax-deductible gift as well. Plus, you'll be helping others out there. 877-927-6648. We come back, we'll go take a look at the daily futures contracts, see what they are trading into, look for some clues. We'll also look at Apple, and have a great morning. Thanks for being here, folks. We'll be right back.
Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. So as we were taking a look at the 30-minute chart on the S&P 500 futures contract, we're going to the daily contract. So we know that there were patterns that we're completing there. Also on the daily chart, what it now shows you, it shows you that the price was up against a resistance area, still against the resistance area. That's the red horizontal line going across my screen if you're watching us on Tiger TV. If you're not, you can always catch an archive of this show on Channel 9. Maybe you're listening on the radio. Maybe you, if you are experiencing any problems getting to the den, just simply go to the homepage of TFNN.com and click on the Tiger TV button. You can catch the show that way. You can do that on your mobile device as well. In fact, if you go to the homepage of TFNN.com, over on the right-hand side, you'll see a couple of phone icons. Click on that, and you can see this show streaming live. So we can see on the daily chart, the ES Mini up against a resistance area as well. Let's go to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding. How are you this morning?
I'm fine. Thank you very much, Steve.
Oh, that's great. That's great. How can I help you? I'm sorry?
I said Merry Christmas.
Merry Christmas to you. Thank you very much. How can I help you this morning?
I'm thinking of an entry into natural gas via the UNG, or maybe even an option. I'm not sure which. And it's looking like it might be about ready. What do you think?
Yeah, I think you're reading my mind. How'd you do that?
I don't know.
Are you a mind reader?
I wish I were. I wouldn't have to be calling you.
Oh, well, I tell you what. You've picked up on. Normally I won't give out. Normally I don't give out too many trades over the air. This is the one that probably looks the best out there at the moment, and that is natural gas. Now, here's where we're up against. I'll pull up the natural gas contract. That's what UNG is traded off of. So I gave you the bullish outlook and then possibly a correction, and then you make the money management decisions on your own. So when we take a look at the UNG or the natural gas contract, we're looking at really a beautiful rising price channel. And that rising price channel, Don, goes all the way back into the April 23rd, 2012 timeframe. Price has been contained for the most part inside this channel. I mean, this is a textbook example of using price channels for making your trade decisions, both for entry and for exit. Now, what we can see here is that as natural gas pulled down on Friday, got down to a low of 3.261 out there. It did not get all the way back down to the bottom of that rising price channel. That would have been a more ideal entry point, but oftentimes the market doesn't give us the most ideal situation. Still was close enough in my book. Now, yesterday, what we received a bullish engulfing candle. Now, that's what you want to see. You also, if we take a look at A to B equals CD down patterns, we'll start with our A point being the high from November 23rd, down to the low of December 5th, and then a retracement for one day back up to December 6th. The other reason why was looking for the move down into that price channel was because that would make a 1 to 1.272 A to B equals CD. Nonetheless, we got to play the cards that were dealt. Am I right?
I think so.
And so you got the bullish engulfing yesterday. So far this morning, you've got a move higher in natural gas. Now, that's the daily contract. So the daily, that's the daily on the natural gas, the continuous contract that we're looking at. Let's go down to the 30-minute chart out here. So on the 30-minute chart, what we are seeing is this. We're seeing that if you use the relative strength indicator, you're seeing that natural gas, as it was pushing up this morning, really as we were coming onto the air at 9 o'clock, it got into what you would call extreme overbought condition out there. And what that said was you don't have to chase it. So we're coming into the open here, it's 9:28. And the question is this thing going to pull back just a bit? So I wouldn't chase it at the open. I would wait to see if this pulls back. Ideally, this will pull back into about the midpoint of the relative strength indicator. That might be, somewhere right around, you're going to take a look at this high volume bar out here, the spike at 11 o'clock on the December 13th. That high is 3.38. down to a level of 3.35 out there. And that's where I suspect that we will see the pullback and get some type of information on it. What does that set up for the UNG? If we go take a look at the UNG closing out at 1907 yesterday. Let me go see what that is trading at here this morning. Let me see if I can push this in here real quickly. UNG is trading out at 1942. So it's going to gap up a bit because the high of yesterday was 1930. Why don't you, if you're going to go ahead and enter, why don't you try to enter right around the 1930 level? And I would have a stop somewhere around 1850 or so.
Okie doke.
All right?
Got it.
Okay. Thanks for calling, Don. Thanks for listening. Again, happy holidays to you. When we get back, folks, we'll go see how these markets are going to open. Apple giving some reversal signals yesterday. It's got some turbulence ahead. They closed at 518.83, trading out right now at 525.32. We'll go see how these markets are going to open. And then we'll go to Lou in Nashua and take a look at the small caps, the IWM. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization information capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 14 points right now. S&P up 1. Composite up 8. Small caps up, looks like about 40 cents out here. Microsoft up 13 ticks. Intel up 5. Google off about $3 right now. Apple up $4.50. We'll take a look at the Apple chart here. In fact, let's go do that now. Let's go see what Apple is doing. Yesterday, getting a key reversal day in Apple. You did a number of things, or Apple did a number of things. Number one, it tested my hammer candle. That was the low of November 16th. That was the 505.75. That had 45 million shares. Yesterday, tested on lighter volume, 27 million shares. That's the type of test you like to see. You also formed a bullish engulfing candle as well as a key reversal day. So you got some nice reversals all along the time frame while you had your RSI down at that 30 level. That means that was in or near the the oversold condition. Now, what you've got here, if you're watching TigerTV, you are seeing 3 black horizontal lines going across the screen. Those are areas of resistance. So right now you've got the Apple trading up into that first level. That is the gap down from December 13th out there. That's got 22 million shares. But first you want to pay attention to the low, 525.80. If you get a close back above 525.80 today, that area no longer becomes an area of resistance. In fact, I won't even use that as a support level. It just simply will be vacated. You've got really 3 gaps in here. Your next gap on Apple, assuming that it can close above that level of 525.80. And today's got to be the day because it's already traded up to a high of 526.40. So your next level, assuming that it can close in there, is going to be up at that next gap. That's where you really had some a downdraft begin again. That was December 5th. That was 37 million shares to the downside. The high there, 569.25. There's one more up above that. We'll just take things one moment at a time. Let's go over to Lou in Nashua. Lou wants to take a look at the IWM. Lou, thanks for calling. Thanks for holding. How are you?
Yes, fine. You?
Very good. Thanks for asking. Tell us what you're doing and how I can help you.
Well, I did get some puts.
Okay.
Actually, TNA.
TNA puts, okay.
I'm just wondering what direction are we going right now?
Well, what you've got here, you've got the markets that are up against pretty decent resistance levels. These are tested areas of resistance. If you get a breakout from here, and the breakout from here, would be both the S&P is the closest one to possibly breaking out. If we take a look at the IWM right now trading into an area of horizontal resistance. That's really your candle that began this was September 25th. That low, that downdraft had 74 million shares. Even as the market moved up yesterday, moved up with 35 million shares. So that's 35 million going into a downdraft of 74. The low of that candle is 83.58. You're trading right now at 83.64. You're trading up inside it. You're also, or the IWM is testing the December 12th area. I would say this, Lou, if you decisively close inside the September 25th candle, that would suggest that, okay, this market may be getting ready to break out. But until you get that signal, all that is going on is we're just seeing some choppiness. Now, in the IWM, it's really in this little sideways consolidation area. And the consolidation that we're taking a look at, it's a short-term one, but this is going from November 29th because that low has acted as a good support area. That low was tested both on December 4th, December 5th, and really December 6th out there. So that band here that you're looking at right now is about 81.62 into the highs of where we're at right now. And so that is, so the markets are up against resistance. This would be the area where if you're looking to go short, your back would be up against the wall. You'd put on your trade. And if the market closed higher, it would indicate that the market would be ready to break out. So, when's the expiration of your puts? Is it a January?
January.
Yeah. So you've got a little bit of time, to sit on those. And right now, the market hasn't given me any indication other than it's traded up into resistance that it truly wants to break out from here. Not that it can't, but it hasn't given us that signal yet.
Great.
Does that help you?
Yep, that does help me.
Okay, perfect. You bet. All right. And so let's go. So let's go take a look at the. Let's go back to the futures contracts here. Let's go back and take a look at the index futures. So it's the S&P 500. Here's an area that will be helpful in understanding whether or not the S&P 500 is going to break out. That red line. So I'm going to go back to what we were talking about as we came into the open or to the second segment of this morning's show. So that red horizontal line going across the screen, that is a good resistance area. If you get a close above, we'll use the high out here, which is going to be the December 11th high, which is 1434.25. You get a close above that, not like by a dollar, but a significant close above that. That then sets up that your next area of resistance in the S&P 500 is not until you get up into really the September 14th swing point, because you can go back and you can take a look at the next area of resistance really being the October 18th swing point. But that swing point, which is a price spread of 1447 up to 1459. You get up inside there, you get up a close inside that swing point. Well, Geez, that takes you all the way back into September 14th. As long as it's there, it might as well go test the highs of the September 14th bar, and that would be 1468. So this again here, if you just simply take a look at it, here is the war. And if you are a person that was looking at markets, then this is where your back is up against the wall. This would be ideally where you'd possibly be. Why? Because you still have to put on a wide enough risk on any trade. You know, you don't say, okay, my stop is going to be so tight that you just simply allow daily volatility to stop you out of your trade. But this is where your back would be up against the wall. And if you get a close decisively over that 1434, you know that you are likely, now the probability is shifted in the direction of being wrong on a short trade in the market. It says in the futures contract, you're likely going back into the September 14th area, at least I would say 1449, and you're at 1428.75 right now. That's on the ES Mini. Let's go take a look at the Russell 2000. So let's just follow up on the Russell 2000, the IWM trade for Lou out here. Now, what the Russell 2000 has done on the futures contract, it has broken above an area of tested resistance out here. That's that horizontal black line. It broke above it on December the 11th. That lasted for 1 day. That was a one-day party. You came through that area again yesterday, December 17th. So you're back up above an area that was resistance. That becomes support, especially if you stay above it here today. What the Russell 2000 is doing right now, it's testing the December 11th highs out there. 835.90 would be a test of that high. It traded as high as 835.90. You got to love that. So that is the high. If the Russell, now in the case of the Russell, because Lou's got the January TNA puts out here, even if the Russell closes a bit higher, it's going to run into its next resistance area, which happens to be the swing point, the set of swing points from October 17th and October 18th out there. That price point is 841. So you're at 834 right now. It would make sense just simply to take that little bit of pain because you know that is the next area of resistance up there. You get to close above that, and I say the Russell 2000 then wants to also go back to the September 14th level. That would be anywhere from 852.70 to 865. So that's on the Russell. Let's go take a look at the NASDAQ futures, the NQ. If we take a look at the NQ not yet up to a resistance area. That red line, that red horizontal line going across our screen here, that is an area of tested resistance. If you get a break above that, that would mean a close above 2698.50. So let's just call it 2699. And you get a close above that. What the NASDAQ futures will do is, well, first they'll try to get back inside the range, that range being nothing more than the trend line, and this is a long-term trend line. So this one here, the NASDAQ futures have a trend line that goes back to August 10th, 2011. So now we're taking a look at November, December. We're taking a look at a 14-month. How'd you like that math that I did in my head there? A 14-month trend line out there. So if the NASDAQ futures can get above this area, and that's going to require Apple to really participate in the move out here. And you did get a key reversal. You did get a test of my hammer candle, your hammer candle as well. That swing point on lighter volume. So it's in the cards for Apple to be able to do it. It's just that it's up against other areas of resistance on its chug higher. But the NASDAQ futures not even close to breaking out just yet, meaning they are where the Russell was trading up near the swing point high, as well as the ES Mini. You can see the NASDAQ has not done that. And it's the NASDAQ that is probably going to be the one that is going to give us the most amount of information as to whether or not there's going to be any kind of breakout here. Let's go take a look at the Dow futures as well, though. Let's not leave out the top line number out here. And as we take a look at the Dow futures here right now, trading off of its session highs down at the session lows right now. So you can say at this stage of the game, right here, right now, it is the bears that, quite frankly, are in control of the Dow futures. The Dow futures have this horizontal resistance line here. This horizontal resistance line goes back to May of 2012. That area is held as either resistance or support. You can see here that the Dow got above that area for 1 day. That was December 11th out there. They came back below it. The area that we're talking about, really, I would say, is the price point of about 13,284. I'll get my math right. 13,284. Right now, the Dow futures trade out at 13,191. That would be your area that you would target if you get a close above that. What that says is that the Dow would want to go ahead and trade up to its next swing point, which, quite frankly, takes you back into October 5th. the actual high inside the Dow. So that would say if you get above and you close above the 13,285 level, that says that what becomes in play is October 5th on the Dow futures. That price point is 13,489 to 13,599. So that's how the futures contracts are set up, and easy enough for you to draw. The lines are very clearly drawn in the sand out here, and so that is a beautiful thing. As long as we're in the futures markets, let's go take a look at the currency, see what we've got going on over in Europe out here. You've got the euro trying to bust out of its horizontal resistance area. That's really the 1.618 butterfly sell pattern. That pattern completed on September 14th, 2012. Interesting how that day keeps popping up out here. So here's another area where you can take a look at something. So you've got as a leading indicator, you've got the currency market. What we can see is that at this stage of the game here, the euro has not broken out. It's just flirting with that area. Of course, it's flirting with that area while being in a or very close to an overbought condition out there. That has to be worked off. Now, right now, for the last two trading sessions, it has been moving sideways out there. So right now, the euro has not broken out of its range out there. If it does, the euro will just simply come all the way back here to its next swing point high. Kind of struggle with how to say that. That takes you back to the May 1st, 2012 time frame. We'll deal with that if we see a break. That level is a low of 132.033 up to 132.833. But at this stage of the game, the euro has not done that. If we take a look at the yen, let's go take a look at the Japanese yen out here. That has been on a tear. Where is my yen chart? I've got the weekly chart. Let's put the daily chart up on the screen. So as we take a look at, well, first, let's take a look at the weekly chart. As long as I got the weekly chart up here, now you're looking at some real resistance, right? You're looking at resistance, folks, that goes back to November 26, 2010. That is the red horizontal line going across our screen. You can see right now that the Japanese yen has moved up into that area. That area has acted as strong resistance. It did get over that in April of 2011. Immediately on the next week, formed a bearish engulfing candle, taking it down to the lows of its range, which was the October 28th level out there. So on the weekly chart, you can see that the Japanese yen is up against a resistance level. Now let's go take a look at the daily chart and see what the daily chart is suggesting to us. The daily chart also up against making a 100% move of a move going back to March 15th, 2012. It moved up into that area, gapped up into that area on Sunday evening, sold off. It is still trading up in that range. Of course, as we can see here on the daily chart, certainly in overbought condition. This area needs to be worked off. We'll see whether it's going to be a retracement, which is what I'd like to see, or whether this is going to be just a digestive period moving sideways. Let's go to Brian in Jackson, Mississippi. Brian, thanks for calling. Thanks for holding. How are you today?
Thank you, Steve, for taking my call. I appreciate it.
My pleasure.
I know you probably get tired of talking about Apple all the time. But,
never. I never get tired of talking about anything.
Yeah, I hear you. Listen, I agree with your daily, with the hammer candle being tested. But if you go back, if you look at the weekly.
Yeah. Okay. Let me put it on the weekly for you.
Well, first of all, even on the daily.
Yeah.
Well, it looks like a huge, to me anyway, and it's subjective, but a huge head and shoulders pattern going back to March.
Are you looking at the weekly chart or the...
Well, right now I'm sorry, I'm still on the daily.
You're on the daily. Okay, I'll switch over to the daily. So the...
is that a right shoulder?
Right shoulder, you're talking about the highs here in December, the December 4th area?
Right.
Yeah. What you're using as a head, we're going to be going to break, is going to be the highs up here in September?
Right.
Okay. I'll tell you what, we're going to break. Can you be good enough to hold on?
Sure.
Absolutely. When we get back, folks, we're going to go back to Jackson, Mississippi, talk to our man Brian. We're taking a look at Apple. Right now, we've got the Dow up 20, S&P's up 3, Composite up 13. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. The Dow up 11 points right now. S&P up 3. Apple is up $5 right now. We're going back out to Jackson, Mississippi, to Brian. Okay, Brian, so take it away. You're my co-host.
Okay, thanks. Well, anyway, I started with the daily.
Yes.
And it looks like it might be, it could be forming a head and shoulders pattern on the right side over there.
Yeah.
I looked at the weekly, and it looks like it's in a downtrend. And I just wanted your opinion on that.
So, sure. So, if we take a look at if I just start off with the weekly, so let's go to the longer-term picture out here, because that's really the better picture. It gives you an idea. If we take a look at last week in Apple, it was moving down with volume, had 119 million shares coming into a swing point with 127 million shares, actually tested that low at 505.75. So you got a test. It was on a little bit lighter volume. But, it is potentially setting up a very large A to B equals CD down pattern. Now, even on the weekly chart, it was moving towards that oversold condition. On the weekly chart, if you get a close below 505.75, that's setting up a large A to B equals CD down. No question about it. And where that's going to take it is back into, the 300 level or less out there. And so there's certain pressure to the downside. It's the daily, though, that actually yesterday, the daily gave a very large reversal signal out here. Now, the problem is that it really has a lot of resistance overhead. So from a trade standpoint, or even if somebody were going to wanted to take an investment in Apple, you got the signal yesterday. There's just simply no question about it. And the way that you would trade it, it's got an $18 or $19 average price move. If you got a close below the 505.75, I would have to say right now you'd use yesterday's close. A close below 501.23, you would be wrong on the trade. I'm not taking this trade, just so you know.
Right.
But it met all the conditions yesterday for reversal. Now, the beauty about that is that being said, if it fails, it just tells you how weak Apple is. And also, It will absolutely, just like Microsoft did in 1999 and led the markets down as it made its highs, Apple will do the same thing for our markets.
Well, there's two things that really stuck out to me. The May 18th low, which is like 530. It seems to be it's just sticking out like a sore thumb to me, and it hasn't really made it back up there yet. Last time it did it back a couple of weeks ago. It shot all the way up. This time it seems to be having trouble getting back there. Yeah,
I think the candle in the day, Brian, that I would suggest that you take a look at and focus on is February 15th, 2012, day after Valentine's Day, because that is the high volume bar that is out there on the daily chart. And that price point is from 496.89 up to 514.26, and that was a day with 53 million shares. And that's a day, I believe, where Apple sold off as a result of earnings and the bulls came in. And, if you take a look at Apple, what Apple is a stock that is an institutionally owned stock. Big time out there. And so far right now, we have seen institutions getting out of this equity. And right now, that is where, the hammer candle, yesterday's candle, clearly where the bulls are harding out. But pay attention to February 15th as well, all right?
Thank you so much.
You bet. Merry Christmas to you. Thanks for calling. Folks, stay tuned. The Money Masters show is up next. If you're off to start your day, have a fantastic day. Always great to be here with you. And I look forward to seeing you in the morning. Take care, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.